Stephen Cohen, you're chief investment strategist at BlackRock Fixed Income. How did the environment change for bond investors since the Fed started the tapering?
I think the key thing for many bond investors is that we're seeing a significant change in the drivers of fixed income. So for many, many years, we've seen consistent policies from central banks, and that has led to lower and lower interest rates, which has supported most bond investors. And now that's starting to change. The Fed is tapering while, for example, the ECB is potentially going to do more easing. And what that means is investors need to be more agile around their fixed income holdings, and they need to think more flexibly about where they go for return, not just rely on falling interest rates.
Last year, investors went into high-yield bonds. Where do you see the biggest opportunities in 2014?
Well, we still see opportunities in credit, including high yield. But as you mentioned, high yield has already had a very good performance, so we can't expect that performance, the speed of that performance, to continue at this rate. We do still see opportunities in peripheral government bonds, for example, the likes of Portugal.
In January, the big topic was the emerging market crisis. Do you see already some opportunities in these markets?
Yes, I think the emerging market hard currency is the most interesting place for many investors. It gives you a yield pickup relative to equivalent rated credit bonds in other markets, but without the currency volatility of owning the local government bonds.